Hey guys, welcome to Stocks 101. And we're going to talk about today everything you need to know to get started in buying stocks. Well, maybe not everything, but we're going to take a deep dive and look at stocks, look at information related to stocks. Hopefully you'll come out of this and have an idea of what might be a good stock to buy. So let's get started. The concept of a stock. What is a stock? A stock is a share of a company. Pretty simple. It's ownership. You buy a share of stock, you own a slice of the company. And you can see my guy there on the right. He owns a share. So you buy a share of Apple, you're an owner. What do you do with that? Where do you buy it? Where do you sell the shares when you sell it? Through an exchange. Exchange used to be people getting together in a room and yelling and screaming and trading stocks. Now it's all electronic. And what is a stock market? Very simple. It's every day, everyone buying, selling through all these exchanges. And that's what we call the stock market. And it's nonstop. The key to all of this, and I want you guys to remember this, the stock market is a price discovery mechanism. Now, what does that mean? It means when you go and sell a stock, you are a willing seller. You want to sell the stock. Someone who buys your stock is a willing buyer. They're out there looking to buy your stock. In our example, it's Apple. And so when you have a willing seller and a willing buyer, and they make a deal, that price is called the market price. And it's important because price is in the eyes of the beholder, right? When you go and sell your shares, you think it's worth so much. The guy who's buying it or the woman who's buying it thinks it's worth another price, but you ultimately agree, both of you agree on a price, and that makes it the market price. And so through the stock market, we can discover what the actual price of a stock is, i.e., what a buyer and seller are willing to transact it for. Okay, so let's go. We got two major exchanges, the NASDAQ and the NYSE, the National Association Securities Dealers Automated Quotation. I think that's what it means. Oh, it's a pretty long name. Let's just call it the NASDAQ and the NYSE, New York Stock Exchange, the oldest stock exchange out there. Two of the big boys where most shares are traded. The market opens at 9:30 sharp. So wake up. Wake up, guys. You got to wake up to get into the game. You know the old saying, right? If you want to play ball, you got to first step on the field. So stocks start trading sharp, 9:30 a.m. Start the day early. The market closes at 4 p.m. Eastern Standard Time. But for those of you who are addicts and junkies, do not worry. There's actually a pre-market that you can start trading pre-market, trading stocks at 4 a.m. up until 9:30 when they actually ring that bell. And after the market closes at 4 p.m., you can continue to trade stocks till 8 p.m. at night. And if you don't want to sleep after that, don't forget London, Frankfurt, Hong Kong, Tokyo. They all start opening because they're across the world. And so basically, this is a phenomenally interesting business and market because it's 24/7 non-stop. And you know what, if you guys have seen that great movie Wall Street, I'm not talking about the second one, I'm talking about the first Wall Street that came out in 1987. Yep, money never sleeps. Money never sleeps. That's what Gordon Gekko said in the movie. And you know what? He was right. Okay, so let's take a look at a stock. I'm just going to use Apple as an example because that's the example I've been using and happens to be one of my favorite companies. So from the SKAITUBE terminal, data console, type in the command info AAPL. So I punch this up and there we go. We get this screen on the left here. By the way, AAPL is what we call the ticker. It's the ticker symbol, and that's just the abbreviated name for a share of stock. And in Apple's case, as you can see, AAPL kind of makes sense. So here's what I get. The first thing I get is a basic description of the company. It tells you about Apple and its business. Well, we kind of all know that, so we don't need to talk much about that. What else does this screen tell us? Market capitalization. What is that? And by the way, if you notice there, it says market cap. It's abbreviated, but really it's capitalization. So market capitalization means how much Apple is worth, right? The value of Apple. Whoa, 2 trillion, over 2 trillion. So this is how much Apple is worth. Basically a ton of money. How do we calculate market cap? We take the stock price, the price that buyers and sellers have transacted at, and we multiply that by the total number of shares outstanding. And that equals the market cap. And what are the shares outstanding? The shares outstanding, very simple. They're just all the shares that are available in the market, right? So that kind of makes sense intuitively. You take the price and you multiply it by all the shares that are out there that are available, and that's what it's worth. So pretty straightforward. Okay, I know I went through that fairly quickly, so let's do a quick recap again. What is market capitalization? Well, market cap, Apple's worth. In our example, Apple Computer. So that's what Apple Computer is worth. How do you calculate it? I'm going to pause here for a couple seconds, let you think about that, and let you think about the answer, and then we will revisit this again. All right, if you need a few more seconds, you can just hit the pause button on the video and replay when you're ready. But otherwise, here it is. Stock price times shares outstanding. You got it. That's how market cap is calculated. Okay, let's take a look at stock prices. If you notice on this page, on the bottom side, you'll see a price. So under market cap, we now go down and we see price. So current price, Apple's trading at $125.83. What does the current price means? Exactly what it means, the current price. And if this was during the trading day, then that price would reflect the right now, real time, what the price is. If it's after the trading day, then that price would reflect what the price closed at 4 p.m. Most likely not after hours price, but what the price closed at 4 p.m. You can go to other sources and find what the after hour trading prices are. Below that, you have the 1 year high, 1 year low, commonly referred to as a 52-week high, 52-week low. And what that means is that during the last 52 weeks or 1 year, what was the highest the stock price has been and what the lowest it's been. So you can see the highest it's been is $145 and the lowest is $62. Pretty big difference. That's over a 52-week or 1 year period. On the right-hand side, you've got price changes, past day, past month, past year, and you can see the percentage changes, and it's a whopping 87% of increase in Apple price over the past year. So for all you folks who have put some money in Apple out there, congratulations, good move. Your goal is to figure out where prices will go. That's your goal, right? When you buy a stock, you want it to go higher. So you want to figure out, is it going to go higher? So it's really important to get a sense of where prices have been. And that's why we look at this little area here in terms of prices and price changes. It gives us a feel for where prices have been. Now, another way to get a feel for how prices have, where prices have been is to see it graphically. And here's a cool feature on the SKAITUBE terminal. Again, go to Data Console, type in CAAPL, which is the ticker. And there you go. Voila, an awesome price chart appears. And this is a price chart that shows you where prices have gone up and down over a period of time. And again, you get a feel for how and where Apple's trading at. The x-axis line below shows the volume. You can see those bars going up and down, red and kind of greenish bars. That represents volume. Volume means the number of shares traded. Heavy volume means lots of buying and selling, and that could mean prices have went up, or it could mean prices went down. If we lay the price chart over the volume bar graph, the bar chart, then you kind of get a feel for where prices have been relative to that day's trading volume. So that just gives you a sense of how the market is trading Apple. And again, you're trying to acquire a feel here on where the stock has been. Now, what does this all mean? I mean, is this is the current price 125? Is that cheap? Is that an expensive stock? Is that a good price? Well, The most important number by far, probably on this page, is tucked away right in that lower left-hand corner where I've highlighted, the price-earnings ratio. And the price-earnings ratio for Apple is 34.19 times. Let's just call it 34 times. And what is the price-earnings ratio, or what we call the PE ratio? It's the stock price divided by the earnings per share. Stock price divided by earnings per share. That is the price-earnings ratio, or PE ratio. The PE ratio, simply put, is a benchmark for valuation. Generally speaking, and again, I'm going to qualify this by saying generally, a high PE ratio means a higher valuation, or i.e. a more expensive stock. A low PE ratio means a lower valuation, i.e. a less expensive stock. Now, a more expensive stock doesn't mean bad, and a less expensive stock doesn't necessarily mean good, right? So think of it this way. You go into a supermarket, you look at two products, and one costs 10 bucks and the other costs 8, and they're kind of the same thing. Well, how do you know what's good and bad, right? It's a Coca-Cola that's 10 bucks, or a generic Coca-Cola from your supermarket that's 8 bucks. Who's to say which one's good or bad, or which one's cheap or expensive? Well, there's a lot of things. It depends on the quality of the product. It depends on what you like, the taste. It depends on the can, the style. So there's a lot of it depends on. And so my point is, it's relative. The PE ratio is a relative metric. You need to compare it to other companies or the market. So for example, if Apple's trading at 34 times this PE ratio, what's the overall market trading at? What is Google trading at? What is Amazon trading at? If Google's trading at 50 times PE ratio, then Apple, by comparison, might look cheap. But then again, it might be cheap for a reason. Maybe it's not doing too well. Although at least at this point, I don't think that's the case. So the key to remember is this is a ratio, it's a benchmark, and it's a relative measure, which means you have to compare it to other comparable companies or markets to get a feel, again, a feel and an understanding of whether or not this is a good price to buy in at. Cheap, expensive, high value, low value. This is the job that you have. The PE ratio is a pretty important concept, so let's just do a quick review here. 2 questions. Again, how do you calculate the PE ratio? And how do you interpret a high PE ratio? I'm going to give you guys a couple seconds and pause here to think about that, and we'll come back to this and show you the answers. Okay, so if you need a little more time, hit the pause button on the video. Otherwise, here we go. The calculation for the PE ratio is stock price over earnings per share, right? It's pretty easy to remember that because it's PE, price over earnings. What does a high PE mean? Generally speaking, a higher PE means a higher valuation, and it means a more expensive stock. Now, please bear in mind, that doesn't mean it's bad. It doesn't mean it's bad. You just have to start to understand the reason why it's a higher valuation. There are reasons for everything. Again, don't forget, it's a market, right? And so markets move because people think certain ways. So coming to what people think, what do the pros think, right? What do those Wall Street guys think? Well, here, SKAITUBE Terminal has another really awesome tool. Type in, again, it's on data console, type in !analyst AAPL, which is our ticker, and boom, this is what you get. You get basically a table of Wall Street firms and what their expectations of the stock Apple, what the stock price and what they think about Apple. So Wall Street financial institutions hire people called research analysts. And all these guys do all day is they evaluate stocks and write reports and say, I like it, I don't like it. And based on the research, they make recommendations. Buy it, sell it, hold it. They also set price targets. If they say buy it, they're going to say, look, buy it because I think this stock is going to go to X price. So now they're not always right, but it gives you an idea of what the pros are thinking, right? They do this for a living. So let's take a look at this table. You got the firms down here, UBS, Evercore, excuse me, Wedbush, Deutsche Bank, Wells Fargo, Piper, all great firms, big kind of financial institutions. Action, this is what the analysts did. Did they upgrade the stock? Did they maintain the rating? Current is the current recommendation. Buy, neutral, outperform, overweight. Overweight is kind of, it's not your weight. Overweight means allocation, means if you've got $100, you should have, a good amount of it in this stock. That's what they're saying. So it's not really a buy recommendation. It's kind of a quasi half buy recommendation. This is just Wall Street talk for distinguishing some of the nuances of, hey, I think you should buy, but, just a little bit. That's how they kind of say it. PT is price target. So we can see UBS here has a price target for Apple of $142. It's currently trading at $125, and they're thinking that it's going to go to $142. So this little tool in the SKAITUBE terminal is pretty awesome because it gives you an idea of what the pros are thinking about Apple. But at the end of the day, you've got to do your own homework. You've got to do your own digging and your own research. When you get into the stock game, you are in the intelligence business. To make money in stocks, you've got to know what is going on. You've got to keep track of the company. You've got to keep track of the market, the economy, news about all of that, world news. Let's just take a look at Apple. Is there a major product launch coming out? Are they going to make a new, crazy new product that's going to be another $100 billion market, right? If so, well, I think that's probably going to drive the stock up. Or are they facing issues? Are they having supplier issues? Did 10 of their factories just burn down because something happened in China? Those are things real that occur real time. They're reflected in the news, and so you have to keep track of those elements. They all impact stock prices, and they all impact your belief and other people's belief in where the stock price will eventually go, up or down. So always ask yourself when you go through news, how does this impact your stock, the stock that you buy? Don't forget, SKAITUBE has some tools. You can type in .news, AAPL for Apple, and you can see all the news related to Apple, the latest news. Also, don't forget to subscribe to the SKAITUBE market news feeds, Twitter, Reddit. You'll be getting constant streams about market and economy information, and also information about Apple. So once you subscribe to those channels. So what's the goal here? You've got some information now. You kind of know how to read these charts. You know how to pop up profile information and get a feel for stock prices and market caps and PE ratios. What is your goal? Your goal is to buy low and sell high. By the way, just a quick aside here, you want to be the bull on the right side, not the bear. The bull means you're in a strong market, and a bear means you're in a weak market. So, by definition, kind of you want to be the bull, not the bear. Buy low, sell high. That's the name of the game. Buy low, sell high. I want you to repeat that to yourself 10 times before you sleep tonight. That is all there is to it. Now, if you buy high, just make sure you sell high. Okay? But that's as simple as making money in stocks. Now, I know some of you out there are going to say, hey, G-Man, there are other ways, man. You can make money shorting stocks. Yes, you are right. Shorting, options, all that technical great stuff. We're going to get to that later on in further modules and explain all that and show you how we can play the market with some of these other tools. Okay? But for now, buy low and sell high. Okay, ladies and gentlemen, we're going to conclude today's discussion here, but do check out the SKAITUBE gaming channel. You've got all the tools you need to get into this game. So check that out. It's fun, it's exciting, it's fast-paced. You've got real money, so skin in the game, and I think it'll be a pretty competitive environment. So check out your skills there, and let me know how that works out. I'd be curious to find out. And thanks for being a part of the community and for listening to this discussion and presentation. And if there's any questions at all, feel free to DM me. This is G-Man. Until next time, happy hunting.